The following is a presentation of TFNN.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. You believe in miracles? Yes!
Let's go to Ilka in Boston. Ilka, thanks for calling. Thanks for holding.
How are you?
I'm doing wonderful.
Steve, seriously, you guys are unbelievable. You are doing wonders for all the traders.
Well, thanks. We appreciate that.
The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 22nd. Can you believe it, folks? Already July 22nd, marvelous Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call holding on to grievances is a decision to suffer. You know, for many years, an old farmer plowed around a rock in one of his fields, and as each year passed, he grew more and more upset about this rock. It had broken 2 plows, a cultivator, and it took up valuable land. One day, the farmer decided he would dig out the rock. So at first he took out a crowbar, slid it under the rock, only to find that the rock was less than a foot thick, and that he was able to loosen the rock and haul it away with his wagon. You know, while hauling the rock away, the farmer smiled to think how all through the years the rock had haunted him. He began to think that maybe, just maybe, there were other areas of his life that he was holding on to with similar type thoughts and feelings that were like rocks in the middle of a mind field. So one by one, he began to take his past experiences, reflect on them, and follow through with whatever appropriate action was necessary to remove the negative thought. In other words, he wanted to lose them and let go. You know, some of us may choose to hang on to old painful thoughts as though they were treasures. I say, bury those types of treasures. Good riddance, after all. They blur our ability to see the good that comes from the eventual difficult situations that each of us must face. Granted, each of us have experienced difficult times and painful situations. Some may be right at this moment. However, it is unnecessary to remain locked into negative thoughts, for we alone have control of our thoughts. You know, the Dalai Lama, he speaks of the power of forgiveness in his book, Freedom of Exile, with these specific words: learning to forgive is much more useful than merely picking up a stone and throwing it at the object of one's anger. For it is under the greatest adversity that there exists the greatest potential for doing good, both for oneself and for others. You know, a mind that is occupied by positive thoughts, well, it blossoms, folks, like a beautiful garden, free of the weeds of negativity. Whether your mind portrays a beautiful garden or a weed patch is totally up to you. Let's go check out the beautiful garden of these markets here right now. Dow futures off about 15 points. No big deal out there. Trading out at 15,491. S&P futures totally flat at 1689.50. Nice move up going, a little short covering rally going into the close on Friday. NASDAQ futures up about 3 points at 30.43 and a little bit of change. Russell 2000 flat out there. King dollar back about 22 ticks right now. Trade out at 82.48. Currency-wise, you got the British pound. That's up about 71 ticks. The euro up 33 ticks. So Goldilocks is on the move. Today we may see that short covering rally. We may see the sphincter muscles of all of those non-reportables out there get a little bit tighter here. Right now you've got gold trading up 28 bucks at 13.20. Silver up 79 pennies. That's up 4% here this morning, trading out at 20.24. Light sweet crude kind of taking a little easy here this morning. Only up 17 cents at 108.22 on its way to 114 out there. We've got copper up just a tad. If we take a peek around the globe here, we're going to see that the DAX is down 66 cents. So we're going to call that a flat market. Same thing really with the FTSE. It's off 13 points, trade at 66.16 out there. Across the board in Asia last night, it was green. I wouldn't say green in such a big way. We'll take a look at those stock charts. Yeah, the Nikkei up 68 points. Shanghai was up 12, and the Hang Seng up 54. That's only 0.25%. Our call-in number is 877-927-6648. Give us a call. We can take a look at your stock. We can take a look at whatever it is you like. ETF, doesn't matter. Just give us a call, folks. We'll take a look at it. First thing I'm going to start with here, don't really do this here, but this is the VIX index. We're going to, since I'm just on my screen here, on Thursday, maybe you don't know, but on Thursday, if you are watching us on Tiger TV, what I do have up on my screen is the daily chart for the VIX. If you're listening in on the radio, or your mobile device at TFNN.mobi. Thank you so much for doing that. Remember, you can always catch the archive of this show on Channel 9. Now, as we take a look at last Thursday's action, first on the VIX, coming off of the low that was put in here on March 14th, down at the price level of $11.05. That would be your first touch point. There was a trend line here that was established. That trend line was hit on May 17th, that low out there, $12.26, and that trend line was hit on Thursday. Was hit down there at $13.20. And on Thursday, as the trend line was being hit, guess what? It formed a hammer candle. That hammer candle was blown away on Friday. I mean, just totally. And when you close below a hammer candle, what does that say? It says if you're long, you're wrong out there. So what does that say for the VIX? Right now it says for the VIX, it ought to, just like any other stock chart, ought to actually get down and tag that March 14th swing point somewhere between 11.05 to 11.75. Maybe it's at that touch point where we see the market actually put in a high. But that VIX, it was an ugly day. Well, it depends on how you look at it. Took out that candle on Friday, that hammer candle, and so it lost a good area of support out there. Now, speaking of trend lines and so forth, let's actually go take a look at what really is moving here in the market, and that's gold. I have been long and strong gold. The newsletter for Mastering Probabilities, that clearly shows that case. And right now, the first target for gold, I've been saying this here for quite some time, is going to be that low of April the 16th, 1321.50. It's trading at 1320.30, 1321.50 has been tagged. So far, the intra-session high is 1325 out there. So that level has been tagged. You get a close inside there. What you're also looking at on my screen here, let's take a look at really at least three different patterns out here. Number one, the red diagonal line is the actual trend line. We were taking a look at a trend line in the VIX just a few moments ago. That trend line, guess what? That trend line, that's a short-term trend line. It's usually coming off of the candle session high from April the 10th. That touch point is 1588. The next touch point that I use, really two of them, is going to be June the 6th. That level 1423, as well as the high on June the 7th out at 1417. And price really moved into that trend line on Friday out there, and this morning or last night as gold opened up, what we see here is it blew right above that trend line. Now it's running right into a downtrend price channel. This is a price channel, in essence, that picked out the top in gold right in the middle of September of 2012. And price has basically been traveling with inside that trend line. So you're coming into horizontal resistance. That's the low of April the 16th. You're coming into some diagonal resistance out here. And we're going to see whether or not this is the extent of the first move in gold, and then we start to see a pullback. It's neither overbought nor oversold. It's really right in the middle, so it's got room to run to the upside. Gold has not been at this relative strength level since the time frame of January 22nd, 2013. What I mean by that is back then we were at about a 56% a relative strength. And right now, today, as we speak here at the moment, you're up at 56%, basically 55.9 out there. So what we are taking a look at, what do I believe? Well, I believe that the low has been put in for gold, and we're going to see a short covering rally that's going to chase gold up to where? Well, let's just take a look at coming off of the top of that trend line. We'll just use the shorter-term one back here on April the 10th and go from that high down to the low was put in. What you also see is just slightly higher. 1335 is your dead cat bounce area. That's a normal move inside any kind of market. Of course, 1432 is the more likely spot. That's your sweet 618 level inside gold, just coming off of that April 10th area, and would also get you right back into the target area of the June swing point high out there, 1423. That is where gold is headed to. It doesn't mean it's going to go there overnight, but there could be one massive short covering rally taking place because the boat is really lopsided. The big money is on the long side when it comes to the metals, both gold and the silver out there. If we take a look at high-ho silver, that is trying to break out. It's really been kind of dismal coming off of the low that was put in back in June 27th, June 28th out there at the $18.18 mark. But it's having some decent move here today. Volume-wise, needs some more juice. It's only got 23,000 contracts as we speak here right now. That is going into 40,000 contracts, but it most certainly can do that. Where is silver headed to? Well, back to the April 16th low as well, right in that $22 range. It's at $20.24. As long as we're in the commodity sector, let's continue over and take a look here at light sweet crude. Light sweet crude having the, right now, no real bears showing up here in light sweet crude for some time. A number of A to B equals CD patterns that are in the process of completing out here. But the really important pattern, in my opinion, is that 14-point sideways consolidation that light sweet crude was traveling in. It broke through that area. It wants to fulfill that price point that gets you back into the $114 level. That'll take you all the way back to May 3rd of 2011 or May 2nd, 2011 when we were up at 114.83. That is the target for light sweet crude. At least that is the target as we speak right now. Also, breaking above a trend line. This is a trend line coming back here from May 1st of 2013. This is the trend line for the 30-year Treasury. So we could see the market, we could see gold actually move higher. We do see that this trend line was broken. It was done on July 7th. Of course, what I'm really calling for as far as a convincing move higher inside bonds. And the convincing move higher just simply is either a retracement back to the 138.25 level or 142.3 is simply getting above the July 5th high. 136 even Steven. Not there yet, but it is making lower lows, and it looks to me like it is going to happen. Maybe what we will see take place is we'll see bonds come back into correlation with the markets out here. And what I mean by that is the high has either been put in, whether that's Friday or that's today, or it is very close here. We have seen a high in the market. The question is going to be, is that a significant high? And if you go over and you take a look at the ETFs out here, what we have seen is we've seen the markets move higher on light volume, and we have seen what we know is we've got volume at the bottoms. If we take a look here at the SPYs real quickly, you just take a look at that June 20th session, 321 million shares to the downside, then 271 on June 21st, and on June 24th, 222 million shares. Compare that, folks, with the high out here on Friday with 103 million shares, and on Thursday, 103 million shares as well. Where's the market headed when it takes its turn south? You got it. It's headed all the way back down to June 24th. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much really changed here in the futures market, but we've got some companies out with earnings before the bell today. You've got Halliburton out with numbers. Their last trade just fired off at 46.06. They closed out the session at 45.83 on Friday. So that's up about 0.5% out here. Their numbers go like this: revenues of $7.3 billion versus $7.2. That's total revenues. Operating income $1 billion versus $1.2. So a little bit light in the loafers there. Hasbro out with numbers as well. HAS is their ticker symbol. They're down about 1 3/4% right now, down 78 cents. They closed at 45.38, traveling out at 44.60. Their numbers that they produced suggest, let's see here, net revenues $766 million versus $811, so a little decline out there. Earnings of 38.3 versus 43.4 in the marketplace. They're getting hit just a tad. Down by 4% this morning is Gannett Inc. GCI is their ticker symbol. They're trading out at 25.30. That's down $1.06 off of their close from Friday at 26.36. The numbers that they reported, $1.3 billion in sales versus $1.31. So not too shabby. Their net income, $113 million versus $119. So they must be guiding lower out here. We had Mickey D. They are out with numbers as well. They're off 2.5% this morning. That should put a little bit of pressure inside the Dow. They closed out at 100.27, trading out at 97.54. We'll see what kind of volume is behind their move. Generated revenues of 1.3. Give me a moment here. Let me get the right number here. Revenue of $13.6 billion versus $13.46 billion. So they beat the top line number for the last 6 months. Earnings per share they beat as well there. Operating income $2.1 billion versus $2.1, but they are trading off about almost 3% here this morning. Six Flags after that nasty incident of someone falling off of a coaster over the weekend here, down about 2% this morning. Right now, down 70 cents, trading out at 35.10. They closed at 35.85 out here. Did total revenues of $363 million versus $374. And let's see here if I can find the net income. Don't see the net income. So let's see. With earnings after the bell tonight, we're going to have Netflix and Texas Instruments. So we'll see what kind of fireworks we've got there. Now, in Texas Instruments' case, it'll be interesting because you've got Intel, which had traded down. We got American Micro Devices, AMD. They formed a island reversal candle out here. And really, if we go back, I'll go back to the ETFs here. Probably the biggest reversal that we saw in the market on Friday, with Google trading lower after their numbers, was the Qs, and the Qs getting back inside the lower part of their range. They had passed a May 22nd swing point, which had 59 million shares. Did it on lighter volume, did it with 31 million shares on July 21st, and on Friday, gapped down. Didn't form any kind of island or anything. Gapped down, had some decent volume, only decent volume, though, on the way down as it got back into the lower part of its range. It did 37 million shares, and that was going against the July 11th move up, that gap up of 47 million shares. So I can't be a complete believer here. I do believe that we are near or at a market high out here for a bit of a while. Now we'll see whether or not, as the market moves down into the July 24th level, just what kind of volume it has. But right now, the Qs, probably a place for us to get a pretty decent signal of the market, because on Friday's move, down with lighter volume, could not bust through that move up from July 11th, and that's where we're going to want to be paying attention to. We know we've had failures inside the structures out here. The SPYs, they failed at the swing point for May 22nd. That was 169.07. That had 243 million shares, and that's been attacked with 103 million on both trading sessions. So nothing really big there. And the strength in the marketplace has been the Russell 2000. It's got two completing patterns right here in this range, either 104.50-ish, 104.60 to 105.07. So close enough. I would have liked to have seen a bearish reversal candle on Friday. We did not get that inside the Russell. Maybe today is the day, but also very close to completing a couple of patterns in the marketplace. As far as anything else here that is popping and dropping, you've got Apple to the upside. They closed at $424.95. Right now, trade out at $428 out there. McDonald's leading the charge down. Yahoo trading off just a bit out here. They closed at $29.11. Their last trade firing off at $28.08. Our call-in number is 877-927-6648. We're going to see how these markets are going to pop, whether they're going to drop. But we are close, folks. We are close. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 9 points, trade out at 15,534. S&P up 1 at 1693. Composite up 9 at 3596. Russell 2000 down 40 cents. We've got Google up $3 and change. Apple up $3 and change. Microsoft up 42 cents. Intel down 13. Cisco down 9 pennies. Apple leading the charge to the upside. Right behind them, Google, then Biogen. BIIB up 260. You've got the GLD up $2.50 right now. Netflix up 248 ahead of earnings. PetMed Express, PETS, they're up 13% here this morning, up $2 and change. Hasbro up a couple of bucks as well. To the downside, other than the dust, it's getting dusted here this morning. You got McDonald's off about $3. Tower International, TOWR, off 12% this morning. That's off nearly $3. Kimberly-Clark, they were out with the numbers as well. They're down almost 2%, down $1.85. Theravance, we'll have to take a look at that chart here. That had I believe that put in an exhaustion gap, which means it should be pulling back to the very first gap out there. And there was a pretty strong-looking stock chart. It saw 4% this morning, so we'll see if there's any kind of volume. THRX is their ticker symbol. And you've got Yahoo, which had a big move up with volume. Maybe that's pulling back to the breakout. So we need to check in on that as well. Take a look at volume. It's off about 3.5% down a buck here as we speak. Let's first start off Six Flags. Let's take a look at what they are doing out here. After that incident, after reporting some numbers out here, Six Flags going against this high-volume day from June 28th out here. It's below that level. We'll see if that's going to hold. That's $35.06. You could really say $35 even, Steven, the June 27th swing point out there. It is trading below that. Volume is 4.8 million shares. So far this morning, 281,000 shares. You get a close below with volume, meaning more than 4.8 million shares, and what is actually being set up here is A to B equals CD down. Your A point is that key reversal session on May 22nd, which we have seen in most of the indexes out here. And this would actually set up a move down to probably about 30.85 to 29.02. Let's see what we've got back here, because 32.30, that would be just your 1-to-1 A to B equals CD, and that's not where it would head. So it head up where, of course, that high-volume bar out here. That high-volume bar is on October 24th, 2012. 6.3 million shares. The high of that is 30.85. The 1-to-1 0.272. A to B equals CD down is 30.87. So that is where Six Flags looks like it is headed to. Most certainly, if it closes below the swing point up $35, it's trading at $34.90 as we speak. Let's see here what McDonald's is doing, what kind of volume we've got out of the McDonald's Happy Meal. Not so happy here this morning. Gapping down volume thus far, 2.4 million shares as it moves down into the June 6th candle. Swing point low, 5.8 million shares there. So it's going to be coming in hot into that trading session. Looks like a little hammer candle here inside McDonald's. MCD is the ticker symbol, but coming into that swing point with some volume out there, so that is not a good sign for McDonald's. You got the 200-period exponential moving average. We'll see if this hammer candle can hold. It won't do it because of volume. There's only 5.8 million shares there. The low, 95.16. What happens if you close below a hammer? That's right. If you're long, you're wrong out here. So now let's take a look at the A to B equals CD. That has not happened just yet, but coming into that hammer candle with volume says, yeah, that's a real possibility. 93.48 would be the likely first target, or 91.21. That's your 1-to-1 and your 1-to-1 0.272 A to B equals CD. I would say 93.45 in this case here, but it all depends upon volume. 93.45 is a set of swing points from back in February of 2013, right around the 93.21 level. But if that gives way, you've got this high volume downdraft here inside McDonald's from October 19th. That top is 90.25, 90.17 is your 1-to-1 0.272 area. So watch McDonald's, because if it cracks that hammer candle, which is the low of 95.16 from the trading session of June 6th, you got another, it's a move down to about 91.17 in the marketplace. Let's keep peeking around here at some of these equities that were out with earnings. Let's see here. Hasbro, that looks pretty nice out here. Hasbro is going to go make a run for its high out here. So it made a high volume high, but it was tested. That was from April the 22nd. And that high was tested, and it was tested on lighter volume and failed. So maybe it's going to make another attempt for that level, which is $48.46. That was April 22nd when it had some decent volume up there, 5.2 million shares. But that area was tested and failed with 1.7 million on May 21st, May 22nd, of course, 1.5 million. Also that key reversal session out here. So that's where Hasbro is headed to. I don't see anything much more there. It's been up on light volume today so far, though not too bad. Almost 700,000 shares, so it's going into that swing point with 5.2 million shares. We'll see if it can keep up this volume. If it does, then that would be a positive sign for the toy maker Hasbro. Let's take a look at Halliburton. That is moving a bit higher. That is taking on its swing point. Now the equities inside the oil sector have really been on fire. And the May 21st. Let me see here. Is it May 21st or 22nd? May 21st is the swing point high inside Halliburton, 45.75. You're up above that. 17 million shares on that day, but you were coming in there hot on Friday. 15.1 million shares. Think anybody knew what was going on inside there? You closed above. Did you close above? Let's see. 45.75. The close on Friday was 45.83, so it did close above it on a tad lighter bit of volume, but, pushing 17 with 15, not too shabby. This morning came back and touched that area. Decent volume so far, 1.8 million shares, so that says that this equity here wants to move higher. Where is higher? Higher takes you all the way back to the swing point from August 15th of 2011, right around the 47.90 level. Looks to me like that is where this wants to go ahead and travel to, and that is Halliburton. Let's see, what else we got out here? eBay, that was from the prior session. Let's take a look at General Motors out here. General Motors actually has formed a three-drive to a top pattern out here, really close to it. And when I say really close to it, what is missing from this is just a little bit on the way of time. And take a look here at the swing point. So the first drive up inside of General Electric was October the 5th. The second drive coming in right here on March the 8th. And on March the 8th, it made a 1.22 expansion. That, for me, in my line of work, is close enough to the 1.272 expansion inside a market. So it was either the March 7th or the March 8th candle out there at the price level of $23.90. We'll call it March 8, $23.90, just a tad higher. Your third drive actually looks like it took place here on Friday last week. Gapping up, good volume behind the move. We'll see if this is the end of it. Now, what's missing here is the I like to see a 1.618 or 1.272 expansion. Time-wise, also, the three drive really would have completed on August 5th if it measured the exact same time, and it really should, and we shouldn't push these models. But if we take a look at the relative strength indicator down below, each time that GE has gotten up into this area, most recently was May 22nd. We saw May 22nd a push higher, and then GE went ahead and ended up finally making a low back on July the 3rd before it has pushed higher out here. So GE, something for us to be paying attention to, in my opinion, out there, at least as far as the chart patterns, and because it's a real great leader of giving us an indication of which way the Dow is going. And so it was actually the Dow that I had been really considering taking a short trade out here. One of the things I like to do is take a look at some of the hidden treasures in the marketplace, some of these hidden correlations. And one of those hidden correlations out here, I'll put this up on my screen so I get this vertically, is GE versus the Dow. So the general there, the weighting structure, it's like number 27 or so as far as the weighting structure out here. But if you take a look at this, up until Friday, we did have the type of divergence that has led to significant market corrections inside the Dow. But Friday's move up, that's the upper right-hand corner. If you're watching this on Tiger TV, I'll go ahead and blow this up. But Friday's move up went ahead and put the trajectory on path with what we were seeing inside the Dow. Prior to that, that was not the case, and we had some divergence out here. So whereas I had been taking a look at the Dow as being the play out there from a short standpoint, GE is really, for whatever reason, I can't tell you why, I just know that it is. Maybe it's because of all the lines of businesses that they're in. If you take a look at some of the diagonal lines drawn across tops inside my charts, when you see that divergence takes place, it's not a timing tool, but it is a directional help and a directional indicator out here. So we did have where the Dow was really showing that it had some real divergence and that weakness was setting up. GE went ahead and actually saved the day. So that being the case, with it saving the day, is the reason to go and take a look and see what the GE is actually doing. And so that's where I went back and said, very close to a three drive to a top pattern out here inside General Electric, and is the reason why I want to be paying close attention. What is it doing here this morning? Not really much, just trading inside that bar from Friday out there. Not bearish, but it does have a bearish type pattern that is out there, and so we need to pay, or I'm going to be paying attention to it for sure. Intel, let me just check in on Intel out here. That Intel is taking on that hammer candle here, so this is going to be important for us to watch as well. That's the July 10th low at 22.64. Now, what Intel has actually done, this is on the bullish case here, is it's pulled back into that hammer candle, which, by the way, that's got volume of 50 million shares, and on Friday came down with 28 million shares. That's actually what I like to see. And based on it's day 1, 2, 3, 4, 5, 6, 7, today being day 8 out here, if this hammer candle doesn't get taken out, I've got to reassess just a little bit here, because it actually would be a buying opportunity inside of Intel out here, or it would be setting up a buying opportunity from the standpoint that your back is up against the wall and that low of 22.64. If you get it closed below that, you'd be out of the trade. But Intel's got some fairly decent volume up here as support. That's what it's trading into, which is that January 17th candle inside the marketplace. That high is at 23.06 out here. So so far so good on Intel at the moment as we speak. Let's go take a look at some of these other core stocks. Let's go see what's going on with IBM here this morning. IBM, as we know, has been a weak link out here. Did move higher on its numbers on Thursday, July 18th, 4.3 million shares, and then went ahead and moved back on Friday. But the pullback on Friday, light volume, 2.6 million shares coming into that high volume session from June 28th out there. Didn't tag it yet, 192.66. The top of that, again, 192.66. So far today, you've been down to a low of 193.28. But the pullback on Friday actually is set up for potentially an A to B equals CD up inside IBM. So so when I put that together with the general, which up until Friday had that divergent pattern in place, it just kind of says, That's at least what it's saying to me. What IBM does have is a nice sell pattern right around the 205.92, 206, 207 area. That would be your little Gartley sell pattern out here. I'm not saying that is the pattern at the moment here that's going to complete, but we do need to take a look at, and you can see that expansion of the B2C swing point, really about a 1.618 expansion out there. So it does have the right pattern, and Friday's pullback, of course, it's summertime on light volume. It's kind of saying, keep your gunpowder dry at the moment. So that's on IBM. Let's go see what else I've got out here. Let's go take a look at, how about Google itself? That's out here. So Google had gap down, in the overnight hours after their earnings release out here. It had gapped down by about $45. Never did that on Friday's session. Got down to a low of 875.61, and they were high volume bar, and they were able to push it up. But of course, that was trading down into the hammer candle. Never got down there. So that is a strong area of support. June 6th out here, anywhere from 847 to 866 in the marketplace. So the Qs themselves, right? So the Qs getting back inside the lower part of the range had me saying to myself, okay, there's some weakness there because it moved back, but wasn't able to break through that little gap up. So that was saying, well, that's actually more bullish than bearish out there because it couldn't bust down through those lows. And if ever there was an opportunity to do it, it would have been on Friday. Yes, it's Friday of summertime, but really they had every opportunity to go ahead and bust through that. Instead, it actually finished at its session high. Now, that was still a bearish candle, by the way. If you just simply take a look at the close of July 18th, that was the Thursday session. In fact, I can't really draw it in during this 1 minute. But if you take a look at it, if you take a look at the close of July 18th, and actually maybe I don't know if I can do this or not. Let's see here. So I'm going to draw from the close. Oh, I got to use the actual right tool out here. So maybe I can do this for us. So let's see here. Let's see how crafty. Now I'm going to go from the close all the way down to the open I'm going to go from the close to the close. So that's the close of the session on July 18th to the close of Friday's Friday session out there, which was at 889. So that's the yellow box. And now if I've got a line tool, which I can, I'm going to draw a line from the top of that box all the way up to the high right here. And let me do this. Let me do that. Let me go ahead and we'll make that a little black wick out here. I'm going to actually draw the candle, the 2-session candle that's out there inside of Google, so you can take a look at the actual blended candle. We're going to do a blending here when we get back from this break. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow down 17 right now. S&P totally flat. NASDAQ up a couple of points here. New York Stock Exchange up 9. So that is the leader in the clubhouse out here. Another reason to kind of say, maybe not just yet. Getting close, but not just yet. We still have net advancing issues out there as well. 311, not wide market breadth, but for a flat market, not too shabby. Now, before we went to break, we were taking a look at Google and taking a look at both the session from Thursday and Friday, trying to put together what is the message of the market out there, and that helps to actually blend a candle, two candles together At least we can see that today's candle really has no impact on that. And so as we take a look at that's the candle that I've got right over here off to the side. If you're just listening on the radio or your mobile device, just go check out the archive on Channel 9. You can take a look at what I've done. But in essence, what I have done is I've taken the actual close of both candles. So the close of Thursday, that becomes the actual high in my blended candle, as well as the as well as the close from Friday out there, which is the high, which was 898, and that becomes the body of the candle. Then the rest of the candle, the rest of it becomes your extremes, becomes your wicks out here. And so when we take a look at this candle, really closing more towards the middle to the upper part of the section out here. So as we take a look at that blended candle, you can see just how strong the bullish side of this candle is here, knowing that it was coming down into swing points and that hammer low out here. So, it's always important. For me, it's all about visualization. When you take a look at pattern recognition, it's really all about visualization out there. And sometimes when you take a look at gaps inside a marketplace, oftentimes the eyes play a little bit of a trick on you. You might take a look at the candles not being such a wide price spread. In the case of Google right here, you could come back to this trading session from between March 4th and March 5th out there. You take a look at that gap. Really, you blend those two candles together. That would tell you just what kind of strength that you actually had inside the marketplace. You'd certainly want to be doing that back here on January 22nd, 2013, between that little hammer candle and the gap up there to tell you just what kind of strength was in the marketplace. Let's go back in and check in on gold here for a moment. Let's check in on gold as well as maybe see what other subcharts I've got inside this little thing here. So gold up towards its session high, trade at 1322.30. That is inside that April 16th candle out there. That's going to start getting the attention of those non-reportables that are still in the net short position. And there were a bunch of them when I took a look at the CFTC data this past Friday. And that was all data through last Tuesday. So whether or not they covered their positions now, we didn't see that. We didn't see much of a real short covering rally between the close of Tuesday and Friday out here. So those shorts are going to start. They're going to watch if they haven't been paying attention to this red diagonal trend line out here. Chances are that if they're not paying attention to that one, they're not really using price channels versus trend lines out here. But maybe it'll be getting above the 1335 level, that dead cat bounce, that will really get the attention of that non-reportable group. If we go and take a look here at the XAU. The XAU out here, that had formed a real nice weekly hammer candle. That was the sign that the bulls were ready to step back in here, and that's what we've seen taking place inside all of the minor equities out here. Now, in the case of the GD, and in the case of the XAU, the beauty here was it came all the way back into the October 2008 swing point, and when it did that, folks, it did it and rejected it with a hammer candle, and that is a beautiful thing. So we're seeing a little bit of a gap up here. Now, to really get out of the woodwork here, the XAU needs to clear that June 21st candle out there. Time flies here, folks. If you're off to start your Monday, have a terrific Monday. If not, I'll see you in a few or see you tomorrow morning. Take care, folks. Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.